Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be analysing Nike stock. We'll be using TIKR terminal to go through the financials, and then I'll be taking the cash flows into my DCF and we'll come to a fair value of their stock. Let's get straight into it. So who are Nike? So Nike Inc. is an American multinational corporation that is engaged in the design, development, manufacturing and worldwide marketing and sales of footwear, apparel, equipment, accessories and services. The company is headquartered in Oregon and it is the world's largest supplier of athletic shoes and apparel in the world. So it's the biggest sportswear company in the world. Everyone knows Nike. The company itself was founded back in 1964 and it was known as Blue Ribbon Sports. And yet, if you haven't read Phil Knight's biography, I would recommend it. Shoe Dog, that's what it's called. 100% recommend it. Very, very good book, and it'll give you an indication of what Nike's all about. So absolutely massive brand. The company itself is listed on New York under the New York Stock Exchange, and it's a component of the S&P 500 index. Now let's have a look at the sales for Nike, and let's start with the sales per business. So footwear makes up 63% of sales, apparel makes up 29%, Converse 5%, equipment 3%, and the rest of it is minimal. Interesting to split out Converse there for 5%. That's quite a lot of revenue for a brand like Converse. Anyway, off track. Sales per region. So 39% come from North America. That's a lot less than I thought it would be. I thought it'd be about half. EMEA, 26%. Greater China, 19%. Asia Pacific, Latin America, 12%, and then global, 5%. So it's a bit of a surprise there. The revenue is a lot more globally diverse than I thought it was. That's 100% a good thing. There's nothing wrong with that at all. You want worldwide diverse revenue from these companies. Now let's have a look at the TIKR terminal financials for Nike, and as always we will start with the income statement. So let's look for the past 5 years. So revenue over the past 5 years has increased by a decent amount. Mid-single digit growth, what was that, 6%, 8%, pandemic, 19%, and then 2022. It's not all the data here, but we can have a brief look. 5% increase. So yeah, not bad growth at all for Nike. Let's have a look now at the profit. So net income. So this has increased over the past 5 years. Lovely stuff. Not by much, but it's still an increase, isn't it? Share count has ever so slightly decreased, not by much, so it's probably just negligible, to be honest. Let's just say it's remained flat. To keep it simple. Balance sheet, cash on hand increased, lovely stuff. Long-term debt has increased, which is a shame, but if it's boosted the growth, it could be a good thing. Hopefully we're not too levered though. We don't want a lot of debt in the business, do we? So return earnings wise, a bit strange here. It's decreased, so that's not a good thing, of course. We don't like to see that. We want return earnings to go up over time. Cash flow statement. So let's have a look at the cash flow from operations and capex. These two figures combined make up free cash flow, and this is one of the most important figures when you look at individual companies, because all stocks are the present value of their future cash flows, and this is where you find them on the cash flow statement. So just from a brief glance, you can see that free cash flow it's grown by quite a bit over the past 5 years, which is lovely stuff. Let's see if we can maintain it, and if we can, good signs ahead. Share repurchases. We've been buying back shares, which is a weird one. It's a bit of a strange one because they've not bought back much, but dollar amount it looks like they've bought quite a bit. Dividends paid, increasing over the past 5 years, which is awesome. Let's look at the ratios now. I like ratios because it tells me a bit more of the story of the business. And return on capital wise, it's a little bit all over the place. Well, if you take out the pandemic anomaly, high 20s, low 30s, you just want to stay consistent, to be honest. So 22% is not too bad, but if you can get it back to this 30-odd%, that'll be a really cool sign. It would be really good. Gross profit, relatively stable, not that much of a change. Net income about 13% mark is what we're looking at, so not too bad. And yes, so current ratio is way above 1. The CCC is not below 60, is what it is though. Can't always have that. The total debt to capital of 41%, manageable, but you want it to stay at this figure. 5 years ago it was at 23%, so we've taken a bit of leverage to grow. Let's come on, Nike, maintain this leverage low, don't become fully levered, because that would be a bit of a shame. But yeah, that's it for the TIKR terminal financials. If you like the look of TIKR, head into the description down below, use my link, sign up with it. Absolutely fantastic platform. It's got stocks worldwide, obscure little names as well. It's got a really good global screener. You can track investing gurus and super investors. Fantastic bit of kit for those value investors looking at individual companies. So yeah, go ahead, once again, use my link down below, sign up to TIKR. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Now let's have a look at the genuine impact stats for Nike, and we'll start with the quality metrics. So it's currently looking very high, at a ranking of 440. Really good stuff here. So profitability very high, financial strength strong, capital allocation very sound. Value-wise though, it's looking very expensive once again. Quite a common hint here on this channel. A lot of companies are like a bit expensive, but not to worry. Historical growth. So growth is looking high and very high, awesome. But yeah, overall, it's just looking like a very high quality company, but very expensive. It's currently got the shield around the quality, so it's one of the highest quality stocks on the platform. So interested in there from genuine impact. Now let's have a look at the analysis checklist for Nike, and let's go over some brief info. So market cap of 165 billion US dollars. Quite a big company, one of the biggest US companies out there. P ratio of 28. First indication, that's high for any company, unless it's growing at very high rates. Earnings yield of 3.6%, so with the earnings yield being so low as well, first indication is overvalued. But let's give them the benefit of the doubt, let's have a look. So my first pillar is profitable, high returns on capital using low leverage. So I like a company to have these three characteristics, because I think this shows signs of a high quality company. The company's got to make money, it's got to make money on the money invested, and it's got to use low debt. Simple as that. So return on capital 5-year average is 28%. Really good stuff. Gross profit margin is above 40%. Net profit margin is below 10%, unfortunately. But as we've seen in the past couple of years, if this has been above 10%, so these probably will be in the green going forward. But the rules are my rules. Current ratio is way above 1. At 2.7, CCC is 95, bit of a bonus metric, but it is what it is. Total debt to capital is below 50%, nearly above it, so let's hope Nike can maintain the debt where it is at now. Proven ability to grow, all green apart from return earnings. We saw a bit odd that return earnings is down when they've been making lots of profit, but it could be to do with something where they have issued dividends, and dividends come from equity, so in the balance sheet. So yeah, is what it is. Capital allocation wise, here it is. They've issued quite a bit of debt here, so nearly 6 billion worth of debt. Share count's decreased a little bit, dividend growth has been there, and another bonus metric here, they've had more write-downs and impairment than asset sales. Not a big amount though, so it's probably not to worry. Overall quality score is 60%. Let's have a look what marks them down here. So the profitability and free cash flow margin has not been 10%, knocks it a bit. The debt situation as well. So yeah, it is what it is. You've got to take these metrics with a pinch of salt. It doesn't mean because it's red it's bad. Like, for example, the net margin being this figure, it's consistently this figure, so it doesn't mean it's bad. But yeah, this is how I rank them, just as a first look. Anyway, buy at a fair price. So the most important pillar out of all of them is you've got to buy a company at a fair price for fair return. P ratio 28 and price free cash flow ratio 28, just too high, simple as that. DCF valuation for a 10% return, share price of $65 per share, current share price of 105, that's a 38% decline until I'm interested. Now look at the DCF and take my free cash flow estimates from marketscreener.com. 2024 is probably too high, if I'm being totally honest, so I'm just going to change that using this. So let's just put a flat rate of 6%. Yeah, that seems a lot more simple. So what I like about this Excel is that you can take analyst estimates, and if a few of them look dumb, you can just put a flat figure in which looks a bit more realistic. But okay, so basically what we're saying now is it's $54, so 48% drop from current price. So yeah, analyst estimates for the next 2 years, and then yeah, so $54, so it has to fall by quite a bit still. 48%, what are we currently at? So $105. Dropped a lot, hasn't it? Yeah, what's that from 175? Oh, did I miss that? So it's 40+% down. Yeah, which is pretty crazy actually. When was it last at 51? It was close in the pandemic, so yeah, who knows. I'm personally going to wait and see what happens. I'd like to buy it around between $50 and $60. That'll be fantastic, and we will see if it gets there anytime soon. But you've got to be patient, got to be disciplined as an investor, and stick to your process. So there we have it. That was my full stock analysis for Nike. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.